Welcome to the 2024 Economic Preparation and Depression Channel. I'm your host, Tony. Thank you for joining me on this weekend edition, March 23rd, 24th, 2024. Please be sure to subscribe to this channel. Preach to me for the latest interpretation of financial news as it becomes available, and I appreciate your support. I read all of your comments. Any suggestions, please leave them down in the comment section below. Today, we're going to be talking about briefly how the interest rate cuts are happening for some countries and not for others. Also, inflation is here to stay, as well as the happiness index. And you saw this in the news. The U.S. is lowering scale on the happiness and quality of life index in comparison to other countries. Let me know what you think about that in the comments. We're going to discuss that and get right into it. By the way, food prices continue to be high at all of the grocery stores around the country as well, and we don't anticipate that cooling off, not even in this year or the next year. So there's something to think about here, but let's get into it. Switzerland becomes the first major economy to cut interest rates in a surprise move. Now, if you remember that Switzerland is kind of a neutral country, and it's kind of a surprise, but not a surprise. Remember, Switzerland has Swiss bank and all that kind of stuff. So it is a surprise that they bucked against the grain. They went against the ECB, the European Central Bank, and the American Federal Reserve Bank that have been leaving rates unchanged. So according to this report that was released on Thursday, the Swiss National Bank on Thursday surprised the market with a decision to lower its main policy rate by just 25 basis points to 1.5%. The economists polled by Reuters had expected Swiss Central Bank to hold rates at 1.75%. That did not happen. So Switzerland therefore becomes the first advanced economy to cut interest rates following a prolonged period of high inflationary pressure. So that's the key. High inflationary pressures. The U.S. and other parts of Europe, and at the to a lesser extent the Australian, some parts of Asian economy, China economy, they don't have that high inflationary pressure yet. They have inflationary pressures, but it's not high. But what do we consider high? Is what, 6%, 7%, 10%, double digits? I believe in our case, in the U.S. case, we would consider, with the way this thing is going on, it's not, the stock market is not based on fundamentals or anything anymore. It's based on greed and speculation. We would consider double-digit inflation, like 10, 11, 12%, to be high inflationary pressures. Right now, inflation is holding at 4 to 5%, at least the official numbers. The shadowstats.com official inflation, as you know, with food, energy, gas, transportation, utilities, worker payroll, all that's included, is really at 12%. But, they cut it in half, less than half, and say we're at 4% and running hot, 4.5% or something like that. So, anyway, but the thing is that this is interesting because do you think that the U.S. banks and the Federal Reserve Bank and other banks, do you think that they're going to begin cutting rates toward the end of this year? I told you I predicted it's not going to happen until the very end of this year. Last meeting, like say after September, October, possibly in December, they'll start cutting these rates. And even if they cut it, it's only going to be a 25 basis point like here. I really don't think it's going to be this year. I think it's going to be next year that they begin to cut these rates when things get bad. Now, Swiss economy, like I said, they have done this 25 basis point cut, but that doesn't mean they're going to continue to do cutting at this now, okay? So this is just interesting. So Norway, they kept their rates at 4.5%. Other people in the ECB have kept their rates unchanged, as you know. Now, the key thing for us is that the dollar, if the dollar collapses or corrodes a little bit, I shouldn't say collapse because that's such a harsh word, but if the dollar weakens, I should say, then that could move up the timeline of the Federal Reserve. Inflation is here to stay, according to MarketWatch.com. U.S. could face unstable inflation in the next decade, a top investment pro says. So, Matt Egan of Loomis Sales says that Fed may get inflation down to 2%, but not for long. So we're on this type of seesaw roller coaster inflation where we could 1 month have, a cut inflation. Inflation could go down by 3% 1 month. Next month it could raise by 7%. It's just that crazy because the dollar, the more you print up, all of this printed money now is coming home to roost. Remember, we had the bailouts of the airline bailout. We had over the last 10 to 12 years, guys, we've had the airline bailout. We had the bank bailout. We had all these bailouts since 2008, 2009, the financial collapse. And that has led to an unstable economy. And it will continue because not just inflation, it's not just the debt, the derivative market. It's the fact that the dollar has lost 97% of its purchasing power. So yes, you can print it up. Yes, you can do all of that. But what it actually buys is less and less goods and services. That is the problem that the average American is facing. And most of the world is facing, because most of the world has been forced to trade in U.S. dollars. Even though the BRICS nations is coming up, they're not really has anything concrete in stone right now in terms of a currency, an actual currency to fight this, guys. So in the meantime, young Americans, according to Yahoo Finance, thought this was interesting, are feeling so lonely and powerless they plunged the nation's happiness score. We're down. Americans are feeling a little bit stressed, not happy. The good old days are behind them. If you live in the United States, a lot of people are feeling, the young adults, millennials, and these Gen Y and Alpha generations, or whatever you want to call it. World Happiness Report shows they rank more 140 countries, and they say that the United States has dropped out of the top 20 rankings in happiness for the first time. They say money doesn't make you happy, but it does, give you options and freedom. And it also is not just the money; it's just the overall quality of life. The work-life balance. Even though a lot of Americans were working from home and teleworking during the pandemic and all that kind of stuff, it's just that they don't feel the quality of life that they get in the bang for the buck. In terms of other benefits outside of work in America as a first world country. So, this is interesting to note. Now, the U.S. Ranked number 10 for those 60 and older. I thought that was interesting, but the country plummets to number 62 for those under 30. So that's very interesting to note that they noted that here in this report. Millennial loneliness also doubled that of those born before 1965 in 4 countries where young people were not as happy as their older peers. What do you think it is? Let me know. Do you think in other countries in this country, do you think that in Western world, meaning United States, England, Canada, Central America, South America, do you think that we're more quote unquote happier? Is that happiness based on things, production? Is it based on the economy? Is it based on intangible things like having more time with your family and friends, being able to enjoy vacations more? I've heard the United States gets less vacation time than the majority of the world. Most of us only get 2-3 weeks, if that. Most other people have siestas and all kinds of things during the day and all kinds of vacations. A lot more holidays, federally or stately in other countries. How does that impact this happiness score, and who determines, what is happiness, and how can you put a score on happiness? Can you put a score on your well-being, your mental well-being, your physical well-being, your spiritual well-being? Let me know what you think in the comments here, because this is going to also impact us as we've been talking about this slowdown, this economic slowdown, this recession leading into a depression, and how is that going to affect your mental health and your spiritual health, your physical health, and your emotional well-being as things continue to go slow down and not just inflate. So even though the stock market can go up to 40,000, like we had predicted that earlier, that during this year that the Dow would go up to 40,000, and Bitcoin would go up, and gold would go up, and not silver, but gold would go up, and all this other stuff would go up. That's a measure of inflation, guys. It's still the same thing. Remember, Venezuela markets melted up. Greece markets melted up. Turkey's markets melted up before the lira crashed. So that's not a sign of a healthy economy. Okay, a healthy economy is one where the participants are productive, happy, satisfied, and are working toward a common goal, and are not stressed, and are not being replaced by robots or whatever else things that are going to be going on in the future. So let me know what you think in this comment section. I would love to hear your opinion on this economy. Will the Fed raise rates or lower rates this year in 2024, and other things as well? Let me know what you think in the comment section. And I thank you for your support. Talk to you very soon.